All right, happy Juneteenth. It is Friday. Stock market is closed, and we are here with a recording in the morning. It'll be a short episode. There are a handful of catalysts we do want to cover, a couple of things that are changing in the market heading into next week, and a couple of things we want to keep our eye on. So we're going to talk about that. We're going to talk about the market environment state and how we're seeing things with our analytics. And then we'll look at some swing trade ideas at the end of this video. So thanks for tuning in. Let's get right into it here. S&P 500, here is the daily time frame. And if you recall, on Sunday, last Sunday, we had the news break right before futures open that we had a peace deal between, or the strait would be reopened between the US and Iran. We saw markets love it and gap up on the news. And so Monday, we had a nice up day for the market. And then we spent Tuesday and Wednesday sort of backfilling, digesting, kind of filling some gaps until we popped back up into the end of the week on Thursday. Thursday was also quadruple witching day, so there were quarterly contracts, just a lot of option contract expiring all on Thursday, leading to some heavy volume and some big moves towards the end of the session. So S&P 500, this is what we're looking at. One thing that you may notice is now if you kind of look back a little over a month, we're sort of sideways. We're very sideways here in the S&P 500. So we've consolidated through time a little bit. And of course, 2 weeks ago, we just recently had this pullback of about a 5% magnitude in the S&P 500. If we go to the Qs, we definitely have more strength here. So we aren't back to highs, but we're pretty close. A week ago, right, we had an 8% pullback here in the Nasdaq 100. Same pattern this week. We had a gap up on Monday, kind of a pullback, and then a move up into the end of the week. So life looks pretty decent here, fairly status quo, but just kind of that upward grind that seems to be continuing. Russell 2000, very much the same, kind of grinding to the upside here. So the bulls are back at it. Let's actually switch gears to our market navigator. So this is our standalone market environment product that we released a week or two ago. So you can get access to this. Our read on the market environment is that we are still in a strong swing environment. That's been the case now for 50 days. It's a 50-day streak. If I scroll down here, here's the nice kind of pretty chart coming out of the April lows was when we transitioned up into this most recent state, and that hasn't changed. We thought that it could potentially get a transition here. This was last week or about a week and a half ago when we began to sell off. That was the moment where, okay, maybe we're going to downgrade our state of the market. Maybe this is where we get a pullback and kind of a reset. That didn't happen. We managed to stay strong. We managed to stick with longs, and we're still kind of chopping it out / upwardly biased to the long side. Now, what I can say is based on our work, a 50-day streak is starting to get just a little bit long on the longer side of things. That doesn't mean short. Everybody wants to get out, too early or wants to hit the exit door too quick and try and preempt the transition. We are getting a little bit long in the tooth, but that does not mean we have to end. We could go for another 50 days, right? We've seen a 100-day streak here in the bullish environment in terms of our work and our model and our research. So right now, bulls are still winning the fight. Let's continue to honor that until we get more evidence to bring us into the other side of things. Mixed internals, so we get a little bit of supplemental readings that are starting to go the other way. We still have broad sector leadership. We still have strong industry participation. So let's not overthink it right now. That's the way we're trying to approach it. If we look at sectors, life is pretty good. Utilities, communication services, energy, those are laggards right now. Those are in a sell or exit signal for us. Otherwise, things look pretty good, led mostly by technology. Now, if we want to pick on where the weakness is, and we did really most of our video last week around this, the Mag 7. The Mag 7 look terrible still. 7 out of 7, we have sell signals or exit signals on all of them. So this is a little bit unique in the sense that we have sector strength, we have a strong market environment, but we don't have the Mag 7 working. That doesn't happen too often. In fact, it's pretty rare now looking back in modern kind of recent history here. So that is noticeable. That is notable. We do want to keep an eye on that. Is this a leading indicator? And, the market is going to catch up because the Mag 7 is going to bring everything down? Or semiconductors and other sector leadership, can that sustain us? And can the markets continue to grind up without the Mag 7, or will the Mag 7 catch a second wind? That's what we're going to spend our time looking at. I think that's where there's some worthwhile monitoring to take place. Otherwise, I don't really have too much else to say except for weak Mag 7, still a positive swing environment. That's the way we're looking at things in our own trading models. If we go back to the charts, the other thing that was important this week was the Fed. So we got a new Fed sheriff in town, and he does things a little bit different. There's a lot less forward guidance. There's a lot less communication and just transparency into the process, or maybe it's just word vomit, maybe all for the good. But generally speaking, I think the market, particularly on post Fed Wednesday, this is the SHY, so this is 1 to 3 year treasury bonds. The front end of the curve, the short end, really saw a pretty good spike up here as the Fed really did come out more hawkish, I think, than maybe we were expecting. Seems much more talk on Fed rate hikes rather than cuts throughout the end of this year. Maybe there's some game theory getting played here. Maybe the Fed's coming out acting, very strong and kind of strong arming the market to kind of see what the reaction is, and then they can backpedal later on. Who knows? All we know right now is the short end yields are on the rise. If we look at like the 10-year, it was a pretty muted week, pretty flat week. And then on the long end of the curve, you can see TLT was actually up about 1%. So the Fed was notable. Markets sort of getting their arms around that. We talked about the US-Iran deal. Let's look at semiconductors. This is still, no signs of slowing down here in terms of leadership. So SMH closed Friday at fresh highs. They broke this pattern to the upside here, and weekly chart is just continuing to extend into the sky. The big elephant in the room is going to be Micron. So Micron reports earnings, I think, is Wednesday of next week. And so this is going to be a good gauge and reality check, I think, on this semiconductor memory chip momentum. That's a big one to have on your calendar, just in terms of your exposure in semiconductors or memory. This, I think, the market will be keying off of quite a bit. All-time highs. That's MU though, right now, going into next week. So that'll be an important one. Keep that on your list. Otherwise, Biotech. We flagged this throughout the week. Biotech starting to break out here. So weekly chart, you can see getting all-time high close. Not all-time high. If I zoom out, multi-year high. Not quite back to the 2020s. But it's been very sideways for all of this year with an upward tilt. And now it's trying to break out here. So notable on Biotech rotation. I think that one, and we'll look at some trade ideas, or at least one trade idea a little bit later. Otherwise, semis, selective biotech, AI infrastructure, Bitcoin, not a good looking weekly candle here. You can see open towards the highs and then basically sold off and managed to close, down 1%. For me, it's still kind of holding on to the February lows just barely. Let's pay attention to that going forward. There's obviously a lot of controversy around strategy right now and some of their preferred products, particularly on Thursday, when their famous stretch here, which is supposed to, in quotation marks, be pegged to $100, started to unwind here. Look, I think strategy, or I think the preferreds are fine in terms of being paid, and life will go on. The dividends will be paid here. I don't see any issues on the horizon unless you think Bitcoin's going down to 10K and staying there for a very extended period of time. I do think for stretch specifically, if you think it should be pegged at $100, I think that's where the disconnect really comes. I think you just need to underwrite the credit quality of the business when you're starting to think about getting paid out in these products. And I would not expect, if I was an investor here, that it has to stay pegged at $100. Anyway, that's kind of all I'll say. I don't think there's a tremendous amount of interest in all these different products, but they're all under pressure here on the preferreds for MSTR. It feels like we're at some type of sentiment capitulation. All the pitchforks are out. Bitcoin's in a bear market. Everybody needs someone to hate. Michael Saylor is straight that person at the moment. I think this too shall pass and we will get through it, but maybe there's another leg down and more pain here. Not that I want to be nonchalant about the risks, but I do think from what I'm reading, there's just a lot of overblown extrapolation here on how dire, quote unquote, this is. So that's my thinking there on Bitcoin and the related. Let's go back to our work here. Oh, let's also talk about MarketSurge, our sponsor, IBD. $60, 60 days. Pretty good sale here for 2 months worth of access. I would highly recommend taking advantage of it. I got a link in the description of this show, and hopefully you can take advantage of some research here. It's over $100 a month usually. So this is a pretty good deal out of IBD, our sponsor of this episode. Now, let's continue on here. Our dashboard Thursday, S&P was up 1%, Galahad up 1%, Quant Rockets up 5%. Couple of sell signals, great showing of momentum performance. Let's talk about some positions here for Quant Rockets. So I'm going to highlight BE first. This is one that's been on our list. We've traded it a number of times, but it is starting to break out once again here. We recently got back involved in it at 283, so we are long. It had a breakout kind of closing high on Thursday. So for you fresh momentum players, you are chasing at this point a little bit, but it is breaking out to new highs. ENTG, so this is a new one for us. I think this is the first time we've ever traded it. This was a purchase for us to start off the week or middle of this week. 161, this also saw a nice acceleration higher here into the end of the week. So you are chasing, but we are at all-time highs. Biotech, talked about that as a catalyst. LABU, so our model is on this. We are in it. We have had some kind of false starts in here and some stop losses triggered earlier in the year, but we're back at it here. 189, looking for 242 as our first target. Speaking of biotech, NTRA, so this one is trying to move back up out of this consolidation it's been in for a few months. So we like it. We're back involved around 214. Stop loss is currently 206. First target up at those old highs around 258. Last but not least, FTAI. FTAI is one that's been dancing around, moving sideways here for a couple of months. It's starting to get its act together. And again, it's a recent entry for us here, 268. So these are all momentum sort of model-based entries and exits here. We have a whole framework on how we swing trade momentum. And you know, it's had a great year, but it continues to, you know, ebb and flow in between these different sectors. You're starting to see more biotech now start to show up, and then some old familiar faces as well, like PE and a few of the others. So that's it. That's what I got for this week. We're going to keep it quick and tight and actionable. Mag 7, pay attention to them. Let's see if they can catch their footing next week, or if they start to drag this market down. I think that's the big kind of thing that we want to be looking at as technicians right now in terms of catalysts. And then we have Micron. So Micron on Wednesday. Otherwise, that's it. Let's see if biotech can get some momentum. Let's see if Bitcoin can hold the floor. And that is it. Links in the description of the show. Have a great long weekend. We'll see you back here next Friday. Take care.